Good morning, welcome to the AUDUSD Securities Markets Update. We'll start today again with a look at the major economic figures which were released from the US yesterday, which kept also the US dollar under pressure and increased the speculations for a pause by the Federal Reserve in the next couple of meetings. But first of all, the ADP non-farm employment change added only 189,000 new jobs in March compared to 214,000 new jobs in February, despite the fact that the estimates were to add around 225,000 in new jobs. And this is again the fourth monthly consecutive slowing down in a row, and the situation has not been seen since 2006. Secondly, the ISM manufacturing PMI also has fallen more than expected, declining toward 51.6 in March, down from 52.9 in February, while the estimates were to decline only toward 52.5. And this is the fifth monthly decline, or the fifth monthly consecutive decline, which has not seen since 2008. And it is also the lowest reading since almost May of 2013. Thirdly, the ISM manufacturing export, or the exports components, also again contracted for the third consecutive months, declining toward 47.5, down from 48.5, and this is also the worst contraction since 2012 and the lowest reading since November of 2012. Fourthly, the ISM manufacturing employment components also eased back toward 50, down from 51.4, which is the third monthly consecutive decline and the lowest reading since also May of 2013. As widely expected, the construction spending the construction spending has fallen by 0.1% in February. However, January's reading has been revised sharply lower toward minus 1.7% instead of the previous reading at minus 1.1. And this is also the index also posted the second monthly decline in a row, which has not seen since the beginning of 2014. The US dollar again has fallen almost across the board yesterday. The euro spiked above, or almost reached 1.0799, and the GBP, or the sterling dollar, recovered above 1.4845, up from 47.40. The dollar yen again also slipped back below 119.40. The dollar Swiss lost more than 80 pips, reaching as low as 96.60s, down from 97.40. And the Aussie and the Kiwi also have recovered slightly after their earlier losses. However, gold prices spiked above 1,200 again, reaching as high as 1,207 at the end of the US session. The crude oil also spiked above the $50 mark, despite the fact that the US crude oil inventories has risen by another 4.8 million barrels last week. However, and it's basically higher than the market estimate, which was around 4.2 million barrels. However, such a spike was partially driven by the US dollar weakness. As for the Asian session today, there was only one economic release from Australia, which had a notable impact on the Aussie. The trade balance deficit increased again toward minus 1.26 billion in February compared to 1 billion in January, while the estimates were to rise toward minus 128 or minus 1.28 billion. And this is the biggest deficit since September of last year. As a result, the Aussie have fallen back again towards 75.70, down from 76.10. And looking at the daily charts, it seems that the pairs are trying to hold well above 76 support area. However, a weekly close above that level is still needed, or the 76 is still needed to confirm a double top, or a double bottom formation. And the catalyst for such a move or another rally would be another disappointing data from the US, and especially if the US jobs report comes in with another disappointment on Friday. Going forward to the European session ahead, there are a few economic releases and events across the session which may continue, or which may keep the market within the same tight range again. Beginning with the UK, the construction PMI is expected to decline below 60 toward 59.7 in March, down from 60.1, which would be also the first monthly decline in 2 months. Moreover, the ECB monetary policy meeting accounts will be released later today at 11:30 GMT time. Going forward to the US session today, there are also many economic figures will be released from Canada and the US, which is likely to have another major impact on the markets ahead of the US jobs report tomorrow. But beginning with Canada, the trade balance deficit is expected to narrow again slightly toward 2 billion in February compared to 2.5 billion in January, which would be the lowest deficit in 2 months. However, this would be the fifth monthly deficit in a row. In the US, the trade balance deficit also is expected to narrow slightly toward minus 41.3 billion in February compared to minus 41.8 billion in January, which would be also the lowest deficit in almost 2 months. However, a surprise is also possible amid the continuous disappointments from the economic releases recently. Moreover, the jobless claims is expected again to rise toward 286,000 last week, up from 282,000 the week before. Finally, and most importantly, and this is the most important index that we'll be watching today, the factory orders may decline by another 0.4% in February compared to another decline of 0.2%, which would be the 7th monthly decline in a row, which is not seen since the crisis in 2008. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic reports and analysis. I'll see you once again tomorrow. Thank you for watching.